Events that seem momentous at the time in the Middle East, such as the Oslo Accords 20 years ago that were supposed to settle the Israeli-Palestinian conflict, or the so-called Arab Spring, often disappoint. Will the recent nuclear deal with Iran, greeted with joy in Iranian streets at the prospect of an end to crippling sanctions and suffocating isolation, fare any differently? Persian Iran, a predominantly Shia country, is locked in a series of vicious sectarian wars with Saudi Arabia and its Sunni allies, who fear Tehran will now use unfrozen assets and increased oil revenue to lock in its regional gains, given how Iran and its proxies have built a Shia axis across the Levant stretching down into the Gulf. But the Gulf has something Iran needs: money. Even cautious estimates of Iran's unmet investment needs run to $850 billion, especially in oil and gas infrastructure, over just the next 5 years. Some regional analysts think the Gulf should use some of its cash to tempt Iran to pull in its regional horns. To win recognition as a legitimate regional power, Iran will eventually have to get on with its Arab neighbors. That will help it reconnect to the global economy and transform itself into an economic powerhouse, not least for its restive young population. The vast investment the country so badly needs, a honeypot for global and regional companies and lenders, could help glue things together. The United Arab Emirates in particular, with its huge sovereign wealth funds, international construction companies, port facilities that Iran will need in the medium term, and a big Iranian commercial diaspora in Dubai, is well placed to help. Western investors are tempted by Iran, but cautious about leaping ahead. Yet the Iranians will need hundreds of billions from external sources soon, and people like the Emiratis, who cautiously welcomed the nuclear deal, are used to dealing with them. If even part of Iran's needs come from the Gulf, that could start to drain some of the sectarian poison coursing through the region.